Hello, good morning, everyone. So, welcome to our daily briefing. And today is November 2nd, which is Tuesday. So, let us start our briefing by take a quick recap on previous important economic data. So, the first one is UK market CIPS manufacturing PMI final October. So, previous is 57.1, forecast is 57.7, and the actual is 57.8. So this actually is slightly higher than forecast. So this is a good news for GBP. Then we go to the next one, which is the US market manufacturing PMI final October. So previous is 60.7, the forecast is at 59.2, and the actual is 58.4. And this is not a good news for USD because we can see that the actual is lower than the forecast. Okay, then we go to the next one, which is the US ISM manufacturing PMI October. So previous is 61.1 and the forecast is 60.5 and the actual is 60.8, which is slightly higher than the forecast. So this is actually a good news for the USD. But we go to the market graph here, we can see that the US dollar index went down last night, not went up last night. Okay, then we go to the next part of our daily briefing today, which is the previous day market volatility recap for gold. It rise 150 pips last night. So let's take a look here. So what happened on the gold market last night? So let us read the factor here. So as the US dollar erased its early gains, spot gold rose by nearly $10 in late trading to close at $1793.28 per ounce. So traders are waiting for this week's important central bank meeting, so which is the FOMC meeting. Investors are expect the meeting to reveal more information about monetary policy and also inflation in the United States. Okay, then we go to the next one, which is WTI and crude oil. It rise 200 pips yesterday. So what happened? Let us read the factor here. So oil prices have strong gains due to the increase in inventories in the largest storage, which is center in the United States, which is API, indicating that the tight supply of crude oil may be easing, but still it's fluctuating at this high level, which is $83 per ounce per barrel here. Okay, so then we go to the next part of our daily briefing today, which is in Asia section. We have to focus on this important economic data, but it's the actual is just released just now at 11:30. So which is the RBA interest rate decision. So let's take a look on this RBA interest rate decision. So previous forecast and also actual remain at 0.1%. So they remain their OCR remain unchanged. Okay, so let us take a look on the news here. So the Reserve Bank of Australia, so RBA board members announced no changes to the official cash rate. So leaving it at record low of 0.1% during their November monetary policy meeting. So the board decided to discontinue the target of 10 basis points for the April 2024 Australian government bond. And also the board decided to continue to purchase government securities at a rate of 4 billion a week until at least mid-February 2022. So we can see that actually this is a good news because they continue to purchase government securities at the rate of 4 billion a week until mid-February 2022. So means next year, another 3 months, then they will reduce it. Okay, so this is actually a good news for Aussie dollar. And then we go to the market graph here. We can see that the Aussie dollars is going strong, so that Aussie dollar versus US dollar is going down now. So we can see that this rate is going down like 30 pips, more than 30 pips. Okay, after this RBA interest rate decision release. Okay, then we go back to our PowerPoint here. Okay, so the next one, when it comes to EU session today, we have to focus on this important economic data. Okay, so let us take a look at the first one, which is the Switzerland retail sales year on year September. So previous is 0.5% and the forecast is remain unknown. So the schedule is at 3:30 later. So if higher than previous reading should be taken as positive for the Swiss franc. If a lower, then previous reading should be taken as negative for the Swiss franc. And then we go to the next one, which is the Switzerland inflation rate year on year October. So previous is 0.9% and the forecast is 1.1%. And that actually is going to release at 3:30 later. So the impact, we have to take note on this one, the CPI. So the impact on the currency may go both ways. A rise in CPI may lead to a rise in interest rates and a rise in local currency. On the other hand, during economic recession, a rise in CPI may lead to a deepened recession and therefore a fall in local currency. Okay, so we go to the next one, which is last one, the last important economic data of today, which is the Germany market manufacturing PMI final October. So previous analyst forecast is same at 58.2, and the actual is going to release at 4:55 later in the afternoon. So if higher than expected reading should be taken as positive for the euro dollar, while a lower than expected reading should be taken as negative for the euro dollar. And then we go to the last part of our daily briefing today, which is the market update for gold. So the resistance level of today is 1799 and the support level of today is 1780. My personal opinion, I will take it as a range for gold market before the FOMC meeting. So why? So let us read the factors here. So the US dollar fell lower on Monday. The previous trading day recorded its biggest one-day gain in more than 4 months. So traders are preparing for this week's highly anticipated Fed policy meeting, which is the FOMC meeting. Okay, so the price of gold is currently mainly volatile, and investors are waiting for the direction of the Federal Reserve interest rate decision, and also they're waiting for the information more about the tighter monetary policy and also the inflation situation in United States. So until then, the market is expected to have limited fluctuations. Okay, so I think what my aspect, so I think the gold market is going to fluctuate between the price of 1780 until the 1799 here. But if the gold price rise above the 1799, then we will look for further upside with target at 18 and 10 here, 1810. If the gold price fell below here, 1780, which is the support level, then we will look for further downside, which is the 1771 here. Okay, so that's all for our daily briefing today. So we should have a good day and see you again. Bye bye.